Yeah, let me tell you about a recent client that Classic Funding helped. The existing debtor finance customer, and they were on a high growth trajectory with a lot of demand for their product, and their existing debtor finance facility wasn't quite enough, so they needed something more. The business was into importing white goods, domestic white goods, predominantly kitchen goods like stovetops, ovens, range hoods, and also domestic refrigeration and laundry items. They needed trade finance because of the cash flow gap between when they had to pay their suppliers, often a deposit with order, and then the balance before the goods are shipped. And it can take a few weeks to arrive, get into their warehouse, and then before it's converted into a receivable. So trade finance plugs that gap. Classic Funding Group helped the customer by assessing their main suppliers, recognising that they're paying a deposit with order and then the balance before the goods are even shipped. There's an element of risk there that the supplier will actually perform under the contract. This trade finance facility, bolted onto their existing debtor finance facility, made an enormous difference to them. One, it took the stress out of the business. The directors could sleep at night. And also, both the debtor finance facility and trade finance facility actually grows with a customer's business. As their eligible receivables increase, so does their access to trade finance. Classic Funding's debtor finance and trade finance facilities are different lending facilities than what you'd get typically from a bank. Banks are looking for hard security. They're looking for usually some sort of property, whether it be residential or other security. With Classic, while we look for directors' guarantees like a banks would, we don't require the hard security of property. Our security is the debtor under the debtor finance is the actual receivables coming from their customers.